And first up, the Bank of Ghana will sell a total of $200 million to bulk oil distribution companies in the first quarter of 2023 in a forex forward auction. This is $220 million lower than the amount it sold to the BDCs in the first quarter of 2022. But will the amount of dollars be enough to support the importation of oil? Here's more in this report.
The calendar showed that the Bank of Ghana will be auctioning $80 million in January this year, $60 million in February, and $60 million again in March this year, bringing the total amount to be auctioned around $200 million. This is a special program that the Bank of Ghana has in place when it comes to selling of dollars to bulk oil distribution companies to finance the importation of finished petroleum products into the country. This means that there will be another auction program to finance other critical imports. But looking at the current pressure on the Ghana city and demand picking up in the first 3 months of this year, many are surprised about the amount that the Bank of Ghana will be selling to these bulk oil distribution firms in the first quarter of this year, looking at the fact that it sold $400 million in the last quarter of 2022. However, sources say the reduction in the amount can be linked to the implementation of the Go for Oil program, which Joy Business understands some of the bulk oil companies are working to participate. According to these bulk importers, this dollar auction program by the Bank of Ghana had gone a long way to stabilize prices of petroleum products on the market over the last 2 months. They even maintained that the Bank of Ghana was able to meet about 80% of their request when it comes to dollars to finance the imports of petroleum products.
And joining us on Zoom, energy strategist Dr. Yusuf Sulemana to discuss this further. Happy New Year to you, Yusuf. Any cause for alarm based on this report that the BDCs are getting fewer dollars for the import of crude oil? That's more than 50% off what they previously received same period last year.
Yeah, thank you very much, and good afternoon to you, Darren, and good afternoon to Charles viewers in Ghana and across the globe. Thank you for having me. Yes, indeed. If you look at the quantum that we require to meet our consumption on monthly basis, this figure is woefully inadequate. However, you cannot look at it in isolation. You have to look at it at the fact that, in the context of the fact that maybe there's some strategy in place behind the scenes. And I think your report just, mentioned one key strategy that is in the levy, which is this petroleum product to gold exchange with UAE. So looking at the amount, Darren, if you segregate the amount from this kind of gold to petroleum product deal, the amount is woefully inadequate. We need over $400 million on a monthly basis to import petroleum products. So to give $200 million within the first quarter, it will create a lot of gap. I mean, a huge gap. However, like I said, we cannot sound alarmed at this moment in time because we are told that I want to believe that because of the gold to oil deal or because of the petroleum product, to gold exchange that is being championed by Bank of Ghana and other allied agencies within the downstream sector, if that is able to cover the deficit that we have, then I think there shouldn't be any cause for concern. And if you look at it, what actually caused the stability of the prices at the pump is just because of the availability of the forex and nothing else. It has nothing to do with any other thing. So if at any point in time we don't have so much available, so much in the system with respect to this greenback, the dollar I'm talking about, then we won't have pressure. But it's early days yet. We have to wait. This month is a crucial month for the downstream. For this is the first time we have going to this kind of deal. If the deal do succeed, then I think there's no cause to worry that much.